Hey guys, welcome back to the channel. Well, today was a tough day for the memory stocks. In fact, it was tough for the tech sector overall. But when you see an article like you see on your screen here that says President Trump says Micron is one of the hottest stocks, does that make Micron a buy here? And it makes you scratch your head and say, did I see what I really saw today? Was today a nightmare, or did I see memory stocks sell hard today? Because the reality is they did sell hard today. Micron sold hard today. So did Western Digital. So did Sandisk. And so did Seagate Technology. All of them sold hard today based on a fear or a narrative that's being pushed in the market that AI is becoming more efficient. And if it becomes more efficient, it'll need less memory, right? That sounds logical until you look at the data and you see that that narrative isn't supported. Because right now, DRAM prices are rising 40 to 50%. Data centers are consuming 70% of DRAM supply in 2026. And AI infrastructure spending is on track to exceed $1 trillion this decade. So if demand truly is falling, you have to ask yourself, why are prices rising? Why is supply tightening? And most importantly, why are customers continuing to sign long-term contracts? Because this isn't a demand collapse. What we're seeing in the market right now is a classic misinterpretation of what is happening. In this video, we're going to cover that misinterpretation, what it means, why it's happening, and what impact it's having on the memory stocks. And I'm also going to dive in and show you the analyst sentiment. Has it changed, or has it been the same despite all of the volatility that we've seen in the last couple of weeks? If you haven't done it already, hit like, hit subscribe to the channel. Let's dive in and talk first about what the market is getting wrong. The market, in my opinion, guys, is reacting to one variable: memory usage per model, but it's ignoring the bigger variable overall, which is total AI workloads. Because here's the issue: even if memory drops, even if memory per model, drops by 20 or 30%, AI workloads right now are growing at multiples of that. We are seeing global data creation grow at a rate of 20 to 30% per year. AI training clusters are scaling from thousands to tens of thousands of GPUs, and each GPU requires high bandwidth memory stacked directly on chip. So the equation isn't as simple as the market wants you to think, or the bears want you to think, that less memory per model equals less demand. The equation we really should be considering is more complex. It's one that says more models times more usage times more demand, and what that'll equal is higher total demand overall. It is a classic Jevons paradox in action. When efficiency goes down, usage goes up. And I think that's what we're going to see, is an exponentially higher use of AI and an exponentially greater need for memory overall. And the data supports that fact. And if we dive in and look at pricing, because pricing is objective, pricing doesn't lie, it is facts. Pricing right now is growing. As I mentioned in the beginning, DRAM prices are expected to rise 40 to 50% based on 2026 contracts. NAND pricing, recovering after a down cycle, is even moving higher than that right now. And HBM pricing trades at a premium multiple of standard DRAM. So if demand was in fact weakening, prices would be falling, right? Right, but that's not what we're seeing. We're seeing them rise aggressively. And this is happening at the same time that inventory levels are normalizing. Supply additions are constrained in the market. This is a classic setup of tight supply plus accelerating demand. It's equaling pricing power for these companies. And we know the supply will continue to be constrained because of how difficult it is to create supply. Each new fab costs 10 to 20 billions each. Leading edge nodes require years to ramp. And HBM production is even more constrained due to the advanced packaging needs. Right now, HBM is sold out through 2026. DRAM capacity expansion has been limited after years of underinvestment. Customers are signing long-term agreements and prepaying to secure supply right now, today in the market. This is critical to understand, because most investors will miss this, because when customers prepay, it means they are worried about not getting enough supply. They're not worried that demand is falling. They're trying to secure supply so they can deliver their products and their goods to the market. And so that's why they're signing these long-term contracts. And if we dive in and take a look at each individual company, what they bring and how it's being impacted right now, or how these companies are being impacted right now, we look at Micron first. It's the cleanest way to understand what's happening in memory right now. Their data center business is growing rapidly, and it's being driven entirely by AI-related demand. High bandwidth memory, that's the memory that's used in AI accelerators, and it carries significantly higher margins than traditional DRAM. Micron has already indicated that HBM supply is effectively sold out through 26, and they're in negotiations for 27 and potentially 28 right now as well. That is not a projection. That is current revenue visibility for the company. At the same time, DRAM prices are also rising, and this is causing Micron's gross margins to expand as a result. This tells us two things about the company. Number one, demand is strong in the market, and two, pricing is real. Pricing power is real. If AI efficiency were reducing demand, Micron would be guiding lower and seeing tightening supply, and not seeing tightening supply and expanding margins. Sandisk is a direct play for NAND flash, and NAND is where AI data footprint really shows up in the market today. Every model generates massive amounts of data, training data, inference data, user interaction data, and that data has to be stored, retrieved, and managed continuously. NAND market is expected to grow over 70 billion over the next several years, and that growth is increasingly tied to data center demand, not consumer devices. After a deep downturn, NAND pricing is now recovering. It's growing significantly higher, with projections up over 90 to 100% quarter over quarter. And that capacity discipline across the industry has tightened supply. That creates operating leverage for NAND providers such as Sandisk. So Sandisk is not just participating in AI, it's leverage to the data explosion created by AI. Western Digital is a much more focused company following its structural changes, and its exposure is centered on high capacity storage. In AI infrastructure, not all data needs to sit on high-speed memory. In fact, the vast majority of data eventually moves to lower-cost, high-capacity storage. That's where Western Digital sits. Cloud providers are continuing to scale storage capacity at double-digit rates, and AI workloads are accelerating that trend. As more models are deployed, more data is created, and that data persists. This is not a short-term cycle. This is a structural increase in data storage demand, and Western Digital is directly tied to that. Now, Seagate technology is one of the clearest real-world examples of that this demand is already happening. The stock has increased by more than 300% over the past year, and the move has been driven by demand for higher capacity drives tied to hyperscale and AI infrastructure. Seagate is pushing into higher capacity drives, 30 terabytes and beyond, because customers are demanding more storage per deployment. And this is a key point. AI doesn't just require compute and memory. It creates enormous amounts of data that must be stored long-term. That is a structural tailwind for storage companies like Seagate as well as Western Digital. And when you look across the four companies, this is a critical understanding, and it ties it all together. So make sure you focus here. When you look across all four companies, they are not being displaced by AI efficiency. They are positioned at different layers of the same system. Micron provides high-performance memory for compute. Sandisk is flash storage for active data. Western Digital and Seagate, long-term data storage, and all three layers are growing rapidly right now. Despite the sell-off, major banks maintain a buy rating. Price targets imply a 20 to 40% upside. I'm going to dive in and show you those in a moment. But analysts expect pricing strength to maintain through 2026 and 27. That matters for these companies, because if the fundamentals had changed, analysts would be cutting estimates. They're not. Let's dive over and take a look at what the analysts are actually saying about these companies right now, where they're rated. So if I dive over here first and take a look at Micron, you'll see we've got Micron, 43 analysts recommending him, 38 buy, 5 hold. Overall consensus is strong buy. The average 12-month price target is 528, 64% upside for where the stock is trading today. If we look at Sandisk, 20 analysts rated, 14 buy, 6 hold. Consensus buy. 12-month price target is 770. It's a 34.5% upside from where the stock is trading today. But if you look down below, you'll see just in the past couple of weeks, KGI, Citi, and Bank of America have all updated their price target, and they're ranging from 875 to 992. Significant upside for Sandisk from where it's trading today. Western Digital, again, 26 analyst ratings, 20 buy, 6 hold. Consensus buy, average 12-month price target is 321, 28% upside. And finally, Seagate, 24 analyst ratings, 18 buy, 6 hold. Consensus buy, you can see, an average 12-month price target of 475.35, a 31% upside overall. And we see that JP Morgan just updated their price target on the 29th to 525, which is about a 45% upside from where the stock is trading today. I bring those to your attention, guys, because you can see that the analysts are not bearish. Their sentiment is not bearish. It hasn't changed. Many of them, in fact, are continuing to be very positive and put out strong price targets for these memory companies in the market today. They are trading right now at incredible values. Make sure you do your own analysis. If you're going to buy it, remember, I'm not a financial analyst or a financial advisor. I am just an individual that has over 30 years of investing. And I'm thinking right now, in my opinion, these stocks are incredible values in the market right now. When everything calms down on the global world or in the global world and all of the macro concerns get lowered and we see the fear and anxiety removed from the market, these stocks are poised to run. They're great opportunities. So guys, overall, I would say the market is pricing for sure. We're seeing it right now. It's pricing lower memory per model, but it's ignoring the total AI workload growth that we're seeing. It's ignoring the data creation growth, the supply constraints, and it's ignoring the long-term contracts that are being signed for these companies right now in the market. So the real equation is simple. Demand is growing faster than efficiency is reducing usage, and that will lead to a total higher demand overall, in my opinion, not a lower demand for memory companies. So when you stop for a moment and you reflect on all the negative pressure that the memory stocks have been facing over the last couple of weeks, you have to ask yourself this question: what actually changed with these companies? Because the data didn't, the fundamentals didn't, the prices are rising, the supply is tightening, and the long-term contracts are being signed right now. Demand is accelerating in the marketplace for these companies. The only thing that has changed is the environment in which these companies are operating in. The risk in the macro environment is changed, and it's beyond these companies' control. So when price moves based on outside factors versus it moving based on fundamentals, because we know the fundamentals are strong, but when we see price moving based on factors that are out of their control and it's affecting and reducing the stock price for strong companies, that's where the biggest opportunities present themselves in the market for investors. Hope you enjoyed the video, guys. Good luck this week in your trading, and drop me a comment below. I'd love to hear from you. Take care.